Good day, I am Dr Suresh Rama, Head of Rates and FX Strategy at RHB Group. Today we shall discuss on markets in general and the state of play. CFTC positioning by speculators in the FX space showed dollar positioning against G10 FX marketplace have trimmed the dollar short positioning to 16.57 billion from 18.01 billion previously, while against emerging FX, dollar shorts were marginally increased to 3.32 billion from 3.26 billion previously. On the rates front, we note peak US implied policy rate stands at 5.41% for the 1st November FOMC meeting, and implied policy rates gradually edge lower to 4.72% for the 12th June 2024 meeting. With rates remaining at its peak and no indication of markets pricing in a rate cut this year, the dollar is likely to remain supported in the near term. On China, we note China's imports and exports fell much faster than expected in July as weaker demand threatens the recovery prospects, heightening pressure for authorities to release fresh stimulus to steady growth. Imports dropped 12.4% in July year-on-year compared to 6.8% decline in June. Meanwhile, exports contracted 14.5%, steeper than previous month's 12.4% fall. On the manufacturing sector, China's official manufacturing purchasing managers index inched up to 49.3 in July from 49 in June, but stayed below the 50-point mark that separates expansion from contraction. The non-manufacturing PMI, which incorporates sub-indexes for services sector, activity and construction, dropped to 51.5 from June's 53.2. China's State Council have announced support measures to target domestic consumption in such areas as electric vehicles, housing and tourism. However, market players indicate it is still far short of the specific stimulus that investors have called for. On Chinese financial markets, such as the yield spread between the US 2-year and the Chinese 2-year, continues to edge higher, reflective of the divergence in monetary policy between the US Fed and the People's Bank of China. Spreads currently hover around 2.66% in favor of the dollar. With the US Fed inclined to raise rates further, the risk is for dollar CNY to remain trading on the weak side. Given the futures market is reflective of short dollar position at play and the spot market for dollar supported, the CNY is seen trading with the weak buyers given domestic fundamentals remaining soft. For the ringgit, it is trading sideways with no indication to have a directional trend. We believe the risk is the currency hovers with the top side at 460 and the bottom closer towards 445. I hope this podcast was informative and have a good day. Thank you.